part of the process of building a business is building a group of investors who believe in you. And for Victory, we started off with a group of angels. And we have a fantastic group. I call it a blue chip group of angels from really excellent organizations and backgrounds. They funded us through the first 6 small rounds that we did over the first 6 years, basically $1 or $2 million tickets per year. That was great because it kept a bootstrapping mindset, but we had access to capital when we needed it, and I could focus a lot on driving the business. We then decided, okay, great, we've gotten to this size and scale, and we could now do a larger fundraising round. We've built a business that's profitable. There's a very clear storyline. It's a vertically integrated business, but the pieces fit together, and you can see how this is going to scale. So the gap between supply and demand in animal protein is $50 billion. There's not a lot of sophisticated players or competition coming into that space to invest. And so I thought that when we went to market with a business that was really attractive, had tackled this space, was going after the informal market, which in Africa is the main market, I thought we would garner a lot of attraction and attention as we took out a formal Series B. So we went out to 63 parties, that's venture capital, private equity, and development finance institutions, to market this story. Now, let me place it in a little bit of global FDI context. So globally, of the whole FDI flow, Africa only attracts between 1% and 2% of total FDI. Within that, most of that goes to fintechs. And then the next subset would be like B2B e-commerce and a few other services industries, logistics, et cetera. Only a couple percent flows into agriculture. So if we start multiplying 1% by 1%, we start getting really small numbers. But within that category, we were really hoping to show that African agriculture and food could indeed be a champion. So we went out to these 63 parties, ran the marketing process, and 62 said no. For me, that was crushing. I couldn't, after having built the business for 7 years and really achieved these milestones with respect to profitability, rapid scale, we'd been growing in triple digits. Still, the main feedback was we don't want to be in anything ag-related because we don't like biomass risk, and we don't think fish farming is scalable. So we moved forward with the one party. Once the round was put together, a few more parties joined, so we ended up with 4 parties. We raised a Series B that was, I think, one of the biggest ag deals to happen in Africa in 2023. And since then, which is now 2 years, we've had phenomenal scale. So we've scaled up 2.5x, and we've recently won a number of accolades. Our 3-year CAGR is 70%, and we're probably one of the fastest growing businesses in Africa today. So interestingly now, if we were to go back to market, we have lots of interest in filling rounds, but there's an inflection point that needs to be hit in order to be able to establish and kind of break the molds or the constraints around imagination. And now, of course, because we're outperforming the fintechs, I think folks are willing to let their biases go and say, okay, we're happy to just back a business that's scaling quickly.